Yes, thank you for having me. Absolutely right. We see that European investors put their money on the sideline by buying into money market Europe, money market US dollars, as well as money market pound sterlings. But we also see that they are buying in diversified products, i.e. equity global, as well as in specific themes like information technology and healthcare.
It's always interesting to see how much dispersion in different asset classes there ultimately is, and you've talked about a number of different areas that the money is going to. As you look across bonds, fixed income, more broadly, commodities, things like gold, and then of course plain equity funds, what does the difference in allocation to those particular asset classes tell us about the mood of the investor?
Yeah, I mean, if you look on the flows, they are really dominated by money market funds with 211 out of the 297 billion of inflows. Then we see bond funds coming in with 74 billion in inflows, equity funds with 54 billion, real estate funds with inflows of 7 billion, commodities including precious metals 7 billion, mixed asset funds 5.7 billion, the so-called other category plus 3.5 billion. And then we see heavy outflows from alternative UCITS in Europe, counting up to 66.1 billion.
Detlef, there is this concern amongst a large amount of our viewers here on CNBC who are asset managers that they will see a continual erosion of their market share compared with the ETF market. Is there any sign at all of the abating of the growth in ETFs as a percentage of assets being put to work in the market, or do we not see that at all yet?
Well, actually, that there is always a fear that ETFs and passives take over the business. But if we look on the general assets under management number, I mean, we've got 11.1 trillion invested in mutual funds. This is 92.7% of the market, and we've got only 0.87 trillion invested in ETFs, which is 7.3% of the markets. If we look on flows, it looks a bit better for the ETF industry. We have, out of the 297 billion of inflows, we've got 251 billion in mutual funds, 85% of the flows, and we've got 45.8 billion, 15% of the flows going into ETFs. And this 15% is roughly the average we saw over the last few years. So from my point of view, there's no reason to be major concerned about ETFs when it comes to net sales. I always say, if the mutual fund industry does well, ETFs doing well, and unfortunately for active managers, if they face outflows, ETFs do well as in this area stuff too.
Really, really fascinating, and I love it when you can back it up with proper stats and numbers like you just did as well. So the ETF industry isn't eating in a meaningful way, just to confirm, into the pie of AUM from the likes of the mutuals.
No, I mean, they are growing on a steady base, and this is what competition is. There is a strong demand for ETFs in some of the larger markets, but you also see that where you have a value-added proposition for the active asset managers, you see that investors are still buying active funds there.